right. On today's episode, we are talking about what are the signs to know ahead of time that your financial team is not growing with you, right? How do we know when we have outgrown our financial team? And we're just not talking about your financial advisor, but we're talking about a CPA, attorney, right? Your whole financial team. How do we know when it's time for a change?
And this kind of discussion is not something that most people who have a W 2 income paycheck and they have a job and they've had the same income they've had for the last 10 years, often what they're doing, it could be fine. It's when people are progressing in their careers, they're moving up into higher tax brackets. Business owners, as their business is growing, they're bringing on more employees, they are moving through tax brackets quickly. Wow, there's a lot that needs to change with that. And sometimes your team is up for it. They've got the runway,
Right.
they're able to grow with you. Often we see clients who are new to us as they come over, we have fresh eyes starting to look at their finances, and we're able to acknowledge like your CPA was okay, but they are not bringing you the value you need. They're not being expansive. They're not being creative. They're not bringing to you the newest tax laws of what can benefit you. Investments, same thing. Like your investment strategy used to be good, but it's not today. So I think as there's growth in any industry, you want to make sure your advisors are growing with you. And there's a season which they absolutely can. They can help coach you and guide you and support you. But there becomes moments where that team is no longer the best team for you, and you need a new team all across the board.
Yeah, the reality is most individuals and business owners actually don't fire their financial team. They outgrow them. And that's kind of a slow creep. And so the earlier that you can notice that you have some needs that go beyond the skill set of your current financial team, the better. The better, your financial portfolio will be served. And change is hard. And there's
Yeah,
loyalty built up.
it
And
really
we
is.
understand that the work that we do is quite personal. So we just want to talk about some flags. I think we all fall into important relationships in our life with service providers where we feel comfortable. They've worked well for us in the past. They've served us well, right? A change is not necessarily indicative that someone hasn't done their job well. It might be that they served you really well for the season that you needed them for, but you feel comfortable. And frankly, their work might just be kind of good enough, right? So I don't know how many of our listeners kind of identify with that, but
Yeah. So one of the things that I've experienced is that a business grows to a certain level, and because of tax or wanting to be able to sell their company, and they start going to seminars, they start talking to other people in the same industry, and they come in with other advisors. I had a client who wanted to develop an ESOP. For those who are listening, that's an employee stock option purchase. It changes the dynamic of everything very much. And in the midst of that, it got to the point where it was so complex that I wasn't agreeing with the outcome. So I'm the one that basically said, you may be looking for somebody different to do this because I don't have all the familiarity in this. We've got other people that we could refer you to that would stay on top of it. But he had so many voices coming at him that he was making decisions, or at least he was heading in that direction, that I felt like it wasn't going to be the best for the what we initially had set up for and structured. So at some point in time, you have to say, I can't do this. I think people they get into this and they create complexity in their life that maybe they don't need to do, right?
Yeah. I think that's a big one, is where is there complexity and where could there be a lot more simplicity, right? Someone who I think is well suited for the task at hand, should be able to see a client's or see, your type of finances and your situation and say, we can add value here. We can simplify this. We can make this very doable versus the view of this is very complex. This is going to get harder. You're relying on me. And I think this is even holding up a mirror as a financial advisor. It's important that we don't get too comfortable or
mm,
in essence lazy with our own
mhm.
clients, to say, hey, they've been a client for a number of years, we've done well for them, they're probably fine, we'll just do what we did last year. Like, that's not us serving our clients well.
Right. And it definitely takes a confident advisor to be willing to say, maybe I'm not right. I'm not the best fit for what you need. Or here's another individual service provider who really is an expert at what you need. And I think that takes an advisor who has definitely a level of maturity and confidence in their skill set. I like to use that phrase like stay in your lane, But truly, financial services and let's I mean, talk frankly too about like CPAs and tax professionals, right? There's a wide variety of complexity in terms of needs for tax planning purposes. And we hear about this a lot. In fact, I'm thinking about a case scenario where we had a couple that had a significant inheritance come across within this last year, and all the different types of assets had a different type of tax treatment. And so we could talk through that with them, but the actual filing of their taxes, ultimately they said, I don't know if the CPA that we've worked with for the last 10 years is the one that we need this year.
Yep.
And
And
that's
yeah, and
hard.
they brought in someone new. I think to your comment, Laura, that there is, I think, a piece of maturity, and we've struggled with that because as advisors, we want to serve everyone, we want to help everyone,
Mhm.
but we realize there's people who their lives are not complex enough for what we do, and so we're in essence our fees are more than makes sense for them. Either they're starting their first job, they have their first first paychecks, and they're saying how much should I put in my 401k, right? That's not hard planning at the moment. On the other side, we have clients, we have a firm that we partner with that they serve only $100 million households. That's all they're working with. They don't work with people generally that are less than that. And so as we're looking through this, we've purposely kind of tried to define our lane. Now, it doesn't mean we couldn't serve people on other sides. We just said this is our power band. This is what we're really good at. And so for us, to your comment, Laura, like having to help identify here's the people we serve best, and then trying to serve that. And be honest with people, if someone's growing and they get to 80 million and 90 million of their asset size, we may talk about transitioning them. We may talk about moving
Mhm.
them to a different advisor who that's all they do.
Yeah, and
For
for sure, we want to as they get more complex, we want to bring in areas where we feel that we don't do on a day to day basis, like what you're going talking about, Laura. You stay in your lane. All of a sudden, they're in another lane over here somewhere.
Mhm.
Do we want to tell them at that point in time we're going to bring in another advisor to complement and stay on top of those changes and the tax rules, the rules and such as that? It's really important I mean, again, we're fiduciaries, right? Fiduciaries mean that we keep the needs of the clients and the aspect of the client's financial needs ahead of our own.
Mhm.
And the retention of a client is important to us. At the same point in time, you have to recognize, again, you go to a doctor. If I go to a general practitioner and I've got something that needs a specialist, I don't question about going to a specialist. I'm going.
Right.
And I don't expect my doctor to feel slighted because I did that. I want my doctor to say, yeah, I want you to go here, here, here. And I think that's the role that we're in. So if we get into a situation where we need to get a specialist for a client, we should say, yes, we've already talked to these people. We'd like you to bring them in and bring that conversation to you. I think we're the captain of the ship. And
Mhm.
it's not that client outgrows us, it's the fact that we're unwilling to bring other help in, right?
Yeah, I think yeah, it's situational for sure. And I think the idea of your financial team being a fit forever is something that is not going to serve you well, right? Rather than kind of reframing that and saying, okay, my financial team is fit for this stage of life that I'm in, and perceive of the likelihood that there may be a different phase of life of which you need a different financial team. So, but again, change is hard. And when we talk about kind of level one, right? It's like, what financial team did I need when we were talking about basic cash flow, retirement accounts, insurance provisions, et cetera? Now, how do I know when I'm at kind of the next level, right? What are some of those added services that might be required or complexity? Let's go over some of those.
Sure. The first one that jumps to mind for me is taxes. People as they make more money, they often pay more taxes, which is appropriate. That's what's expected. That's how our tax code is built. However, as your business is developing, as your cash flow is changing, there are more and more interesting tax things that you need to be talking about. And so if your tax folks are not being proactive as you get towards the end of the year, talking about things like donor advice, and this I guess is the crossover between financial advisors and tax professionals, your tax filers. At the end of the year, you're not talking about charitable giving, donor advice funds, depreciation for real estate. If you're not having some of these year-end conversations, your team is probably more passive than you're going to need them to be as you grow. We do a lot in November and December with a lot of our clients as we're looking to say, okay, what else do we want to do this year? We've had a successful year. We have a lot of the numbers are in. So now let's make some year-end choices. And man, Roth conversions, donor advised funds, depreciation things, we're talking about that constantly in these months. And not just talking about it, pulling levers for our clients to get this stuff in before the end of the year. And that's just one piece of complexity that our clients need. where we're at. They need to do some one-off planning. So I guess the first one I would say is taxes. If your taxes haven't changed in a couple of years, your filing's just the same as it was last year, you're probably missing out on either some of the new tax rules or some of the complexity that you could be.
Yeah, again, the big beautiful bill that just was passed, that's going to have some changes because they've brought in some changes that people got used to as far as their exempt status and things like that, standard deductions. Now, all of a sudden, that's going to change. That's going to have solar, for example. If you don't have your solar installed and being used by the end of this year, you're going to lose all those credits. And again, these are dynamic things that are happening within the tax code. So you have to have a good CPA that is not just filling numbers on the page, but is being able to see more to the distance what you're giving you advice. And
Mhm.
I have difficulty with a person who just fills in the numbers and said this is what you owe.
Right.
But
But there's
oftentimes
a
that's what we run across, right?
right, and but there is a difference going back to that fiduciary role in that the CPA doesn't share that same fiduciary role, and
Correct.
so having that team where you want a CPA that is knowledgeable to the extent of the complexity that your filing requires, and you want a financial planner that's really adapt to tax strategy, changes in the tax code that could positively impact or negatively impact your tax filing status and strategy, right? So, being able to liaise with our clients' CPAs has been most effective at actually taking a strategy and then being able to refine it and make sure that it's executed according to what the client wants.
Yep,
Yep.
for sure.
That's kind of the ideal pairing.
The next one, I think this could be a hot take a little bit, of if your investment strategies hasn't changed, you're still buying the same ratio of things that you bought previously. It could be okay. It could be fine. It could not be. I think we actually see this on the other side. We have clients who, they have maybe they're a couple $100,000 invested in the stock market, and now they want to talk about alternative assets, direct lending, real estate holdings. Great things to talk about. There is an element to say for a lot of clients. I mean, you could build a couple million of dollars in the markets, and that's great. Like there's still access there. There's loan processes for securities backed lending, all sorts of great reasons to have a large built up investment account. However, as your account is growing and building, if it's there's never a conversation, should I be including real estate? Should I be including alternative assets? You know, you might be having a problem there. This needs to change and develop as your life becomes more complex. And a big one that we talk a lot, again with the taxes, but how much of your money should be in post-tax regular investment accounts? How much should be in some pre-tax retirement? And then the question being, how should all that be invested? I would say it's a moving target. And as people's lives grow and develop, your investment strategy should grow and develop with it.
Yeah, everybody likes the reward, right? But they don't like the risk.
Mhm.
And there's, buying a piece of real estate, for example, can provide you rewards, but there's a huge amount of risk with that. And probably at the top of the list is who manages the property. Are you going to manage the property as an investor, or are you going to hire somebody to manage the property, the selection and the management of the property? It's an immense amount of work. And oftentimes investors see the concept, but they don't see the day-to-day activity that has to happen in order to manage a fixed asset like that, or something that requires that ongoing management structure.
Yeah, and you talked about risk. I mean, I think there's a risk too of continuing to work with a team that's not the best fit for you. And
Right.
so, some of those risks could be that you're not minimizing your tax liability over your lifetime, right? Because there's not new strategies being introduced to you. It could be that your investment strategy isn't well fit for your current goals. It could be that there's not clarity to you in terms of when you can retire, when and how. So that has a lifestyle impact, right? When we talk to business owners, it doesn't really matter what phase of the business cycle they're in. If they're growing a new business, if they're working on kind of growth, if they're now starting to consider, future options for their business, at all points, it's necessary to continue to check in on a succession plan. Where are you headed? What's the end game here? Certainly, you're not planning to work forever. So, what are the next steps? Because that's all going to inform kind of your current decisions, right?
Yeah.
What are some other,
Yeah,
yeah, risks?
mortality goes for all of us, right? I mean, none of us are gonna, like you're saying, Laura, none of us are gonna live forever. But also we need to understand the transition. And I think it's interesting at this particular time, COVID has had an impact on so many people. Then we take into account, I've read so many stories about companies that depended upon products from China and tariffs came in, and all of a sudden their business has been really, they've had to pivot. in order to survive. And this all happened pretty quickly. And if you've got a supply chain and you've been had a successful company, and all of a sudden your company is having to get their product or get their parts from someplace else in the world, wow, it is not an easy transition for a lot of people. Again, is that for somebody who's in their 80s, or is that for somebody who's in their more 40s or 50s? I mean, it takes a lot of work and transition to go through that kind of transitions.
Mm,
Anyway,
yep. I think there's some interpersonal red flags. When was the last time that your advisor, whether it's tax, financial, legal, challenged you on something? When did they
Mm.
tell you no? When did they tell you, hey, that's not a great idea? Or when did they bring something that you'd never heard of? They brought something to you. I think any advisor can fall into the habit of doing the initial hard work, getting someone set up, and then kind of defending the status quo.
Mhm.
Which, when you think of a business owner, in essence, your whole business is defending the status quo. And most entrepreneurs, they have to keep shaking and keep moving to progress and get the business to grow. And so when they look back at their financial advisors, yeah, that legal structure you set up used to be great. Is your attorney now looking at this and saying, hey, based on how you've grown, we need to make some changes here. We need to have a
Mhm.
leasing company owning the equipment, and we need to have a separate entity owning the real estate. We need to break this out a bit, right? You shouldn't do that day one. However, often as you build forward, that becomes needed. Same with your financial advisor. When was the last time they brought something new to you and not just defended what was in place? So I think that's a red flag of someone who is not thinking critically about what's set up.
Yeah, I mean, one of the core values that we have here at Tricord is to have our conversations be expansive with our clients. And that becomes more and more challenging the longer that you work with them because you build an initial base plan and then you implement. But that last key part is monitoring, and that requires an ongoing relationship. Everybody's life is complex, but in different ways. It can be personally complex, your family can be complex, your business can be complex, all of it at once, right? And so, an ongoing relationship, I always want to emphasize that part of the financial planning process is the monitor. This is when many financial advisors go back to that status quo. Great, we've got it all set it and forget it. Call me if you need anything.
right.
We hear that over and over and over again. Well, I had a financial advisor and then we got all set up and then I never heard from them. Or in
Because he
fact,
worked.
now I need something and I can't get in touch with them.
And most likely the person was based on transaction. He did the transaction, got his compensation, and then was down the road looking for somebody else. Our relationship is different with our clients. It is ongoing. We have a thing in our office called a planning 360. We're looking at all the key aspects of everything. So as we have progress meetings, we're hitting on all those aspects. Has there been a change? Do we need to look at the tax laws? Do we look at all the things that are important to you? And if we don't have the expertise, can we bring the expertise in to provide advice to the client? Right.
Yeah, I think the last kind of yellow flag I might see is kind of asking a candid question, maybe of your spouse and of your advisors, to say, like, what's our vision? Where are we headed? Like, repeat to me what the vision is, for your financial advisor. What's my goal? And, often it's the default, oh, well, you want to retire at this, but if they're a thought partner, if they're bought into your goal, I think that's meaningful. And I think even with your partner, asking your personal partner, do you know where we're headed? Do you know what this is? And if they're uninformed, that means your advisor is really just dealing with you, which is
Mhm.
often easier. But man, to be holistic and to have both spouses understand where you're headed, understand what the family is about, what you're trying to accomplish, is so much more powerful for having all your advisors working towards the same goal.
Mhm.
And I would imagine most people, if they asked, hey, what are my goals, going forward? What's my vision? Most advisors have no idea. I'm just here to file your taxes, sir. I don't know why you're asking me this. Versus having a team that says, oh, we know what your vision is. We know that you care about your kids. We know that education is important to you. That's why we have these things set up. And let's think creatively about what's next. So, yeah, I think that's a key piece of being able to ask the people in your life, your group of advisors, to say, what else? Or do you understand what we're about? Do you understand where we're headed? And having them partners on your team.
And how can you support me in that? And I think the cost of not having a team that can support you well is fairly invisible. You probably won't see it for many years, but when you look back, you might recognize some of those opportunities that came at the expense of just kind of staying where it was comfortable. But we all recognize change is hard, and I think there is a respectful way to make transitions in your financial team by still regarding the work that they've done. Like I said, it could be that they've done great work in the past. Moving and changing different people on your financial team doesn't mean that you're disregarding the good work that they've done for you. It's just maybe the seasons in your life have changed and the complexity that you need. So let's talk just kind of on a detailed basis, like if we were to talk about more complexity, what are some of the services that are maybe at that level of complexity that are a little bit different?
I think there's estate planning is one that jumps to mind. Vanilla estate plans, everyone needs them. But when your assets start getting larger, we need to think long and hard about how you're going to utilize these assets and get to the next generation.
Mm-hmm.
A leveling up of estate planning is a key one. Often that has to do with the contribution limits or the estate tax limits. So right now they're about 30 million. People who married couples who are below 30 million, you may not need as much complexity. Whereas married couples that are over 30 million as their asset or their business size, they've got some extra layers of complexity that need to be dealt with.
Yep. I think about succession planning, exit planning. At times, property management is one as well. Dad, what else do you think of?
Well, again, I think that the dynamic of an entrepreneur, they have the energy to start a company. Goes to the second generation, you're looking for somebody to manage the company, maybe not necessarily to have that idea, but you don't want to divorce yourself from the drive that drives a company. But oftentimes it goes into that next generation, whether it be people that you've hired or family members. They don't see and they don't have the desire to push the business or to make the decisions the way that the entrepreneur did at the very beginning. Then
Mm-hmm.
that's why, I mean, Jeremiah, we've talked about this. By the time it gets to the third generation, the company basically flounders and the assets are sold
Mm-hmm.
because the desire just wanes. So I think to have a business to sustain itself generation after generation it's a rare commodity because the vast majority of businesses don't make it right beyond the second generation.
Yeah, I love this phrase that, the loyalty that you hold is admirable, but misalignment with your financial team can be expensive. And so I would just kind of wrap up our time by, prompting our listeners to ask those on your financial team, your advisory team, your estate planning attorney, your CPA, like what new advice or how has your advice to me changed over my lifetime or as my needs and my wealth and my financial portfolio has changed. Kind of what have you done for me lately, right? What does this look like? And it's okay to challenge. And really what you're doing is just seeing if they're right for the season that you're in.
Yep, that's right. I like that. It's really an advocating for your future, right? Advocating for your future self to make sure you're on the right track.
Until next week, folks, may you grow in wisdom and knowledge. Thank you for listening.
We have a few more things to let you know about before we go. Podcast reviews really help us to serve more people and get this information into the hands of the people who need it. Please leave us a review, even if it's not 5 stars. We welcome the feedback.
And we invite you to let us know what topics you would like to hear more about or what would benefit the people in your life who you're closest to. We have more resources online. Those resources are designed to help you share this great information easily with people in your life. To access those resources, please visit tricoreadvisors.com.
Often we hear from clients that they wish they had talked to us sooner. If that's you, we'd be thrilled to see how financial planning can benefit your life. Email us at contact@tricoreadvisors.com or simply click on the link in the show notes.
This show was produced by Graham Gardner at Model FA. Find out more about how to create a podcast for your financial planning business by visiting modelfa.com. We love creating content that's useful, resourceful, and maybe even a little entertaining. We want to make this mega universe of financial topics and advice applicable and helpful to your life.
Remember, at Tricord Advisors, we are your future's best ally.